So everyone after a tiring day looks up to going back to their nest, their house. But buying a house has become an expensive affair as very few properties with all amenities in the metro cities cost below 1 crore. Now in fact the cost is hovering around even 2 to 3 crores, and buying such a house on home loan by an individual person will be difficult, but if jointly owned, the chances of getting an approval is much more. Therefore, in today's episode of the ET Money Show, we will help you to know everything about joint home loan, who can opt for it, what are the benefits, and much more. And to discuss all of that in detail on board, we have Mr. Pankaj Bansal, who is the CBO of bankbazaar.com. And very good evening, Pankaj, and thank you so much for joining us today on ET Now. Let's start with the basics and let me help our viewers understand what exactly is a joint loan, and can any two people purchase property, or there are some restrictions on that as well?
Yeah. So I think when we look at joint home loans, right, joint home loan is it's a cumulative loan that two people take together. For example, I have a loan of 50 lakhs. Me, my wife, or my sibling or my parents, we can be a party together to that home loan. So normally, no two parties cannot take it. It has to be closely related parties who can take the home loan. So, for example, it could be your parents, your children, your spouse, your sibling. I think these are the four broad categories in which people can apply. And this could be just from a family member that we call it. Those people only can apply for this particular home loan together. So this is how a basic definition of home loan is. With a joint home loan, we say is considered. So no two person can take that home loan. It has to be, somebody who is related in certain fraction, like a spouse, like your wife, like your sibling, like your children, or your parents. I think this is a broad category in which you can opt for a home loan together.
Okay, thank you so much, Pankaj, for highlighting all the available candidates. But actually, how do you choose the right co-applicant or the right co-borrower? Is there something that the borrower should be taking care of?
Yes. So I think what borrower can do, right, in the hindsight is, so one, when you have a co-applicant together with you, right, your income eligibility becomes higher. So if my income is 100 rupees and my wife's income is also 100 rupees, then you can get a home loan up to 200 rupees as a total income being clubbed. So that's one factor that you should take in consideration. Do you want to raise your eligibility? If you want to raise your eligibility, obviously you have to club it with somebody like who also has an income. So that's one criteria. Second criteria is that today, when you take a home loan, right, if there is a woman co-applicant along in the home loan, then you get a 5 to 15 basis points reduction in interest income. So whenever your interest rates are 5 to 15 basis points lesser because there is a woman applicant along with you, then obviously there could be the second criteria. You can decide that, if my income is good enough, then I can take just a person who is not even earning. But because that person is there in the as a co-applicant, my overall interest outflow will reduce by 5 to 15 basis points. So that's the second factor you can consider. Third factor, based on the need in terms of my property is owned by my parents, obviously I would recommend that you should take it along. Somebody who's owning the property should also be a co-applicant to avoid any kind of legal hassles later. So I think these are the three broad criteria in which you should decide which should be the co-applicant with you along with your home for your home loan.
Understand, but Pankaj wanted to ask that can you actually take a joint home loan with a person who is not a co-owner of the house? Like we have to give names who is going to be the owner, but can we take the loan on two persons' name and just some other person or one of the person can be the owner of the house on papers?
Yes. So the co-applicant is not it's not required that he has to be a co-owner. A co-applicant could be who's not the owner of the house also. He could be part of the application that you put in. So that's something that is very, very clear, that you can always have a co-applicant who is not the owner of the house or his name is not in the registration document. That's fine.
Understand, but Pankaj, now the schemes actually look a bit lucrative, and this whole idea of taking a joint home loan. Why I say so? Because the burden of the loan is actually being divided into two-person. But apart from that, just wanted to understand that is there how the tax benefit? Because on home loans, we do get a tax benefit, right? So how is the tax benefit being claimed by the both the borrowers, and any other recommendation that why you think that people should opt for joint home loans? Is there any more point to highlight? Please tell our viewers as well.
Yeah. So I think Shristi, what happens is that there is a two sections that are involved when you take a home loan rebate, right? When I'm paying home loan, there is section 80C and there is section 24, in which the club is like 2 lakhs plus 1.5 lakhs. So any one individual who's an applicant will get about 3.5 lakhs of rebate in their tax rebates. If I have two people, right, me and my spouse, for example, or my wife who's also earning. So what will happen? 3.5 lakhs I can take, 3.5 lakhs she also can take. So put together in the same metrics, you can take 7 lakhs of reduction. So it makes a lot of sense to do that in terms of when we look at a tax rebate that you look at it.
Understand. That's even a better way that when we are going for some tax claims. But Pankaj, now a couple of questions on some real life problems. Firstly, wanted to understand that if somebody has taken a home loan with their spouse and they end up having a divorce, then what is the way out, because they still have the loan ongoing, and what are the formalities that they need to be taken care of?
So when you have this issues, right, when you have a divorce and all, so first thing that normally we suggest is that you should liquidate the home first. When you liquidate the home, whatever outstanding is there on the home loan has to be paid. So your home loan gets closed. Otherwise, because any which of this property is hypothecated and there are legal complications around it, both the parties will get notices and all that. So it's better that when you do a divorce, there has to be a settlement which could be out of the court settlement also. You could go settle, sell the property, and whatever property that you're selling, obviously the home loan will get closed because you have to take NOC from the bank or the NBC from you are taken the home loan. So that is one idea. Second idea is that one of the people who is the owner of the house can take complete rights of it. So you can transfer the home loan to the other person and you can just do a application to the bank that the home loan co-applicant should take off. And there is a settlement that happens between both the parties. So that's the second way of looking at it in terms of this. So it will be a very case-to-case basis, to be very honest, in terms of what are the settlement criteria that these two people have. But broadly, yeah, I would suggest that when both of the applicants are there, either you jointly agree to close the home loan first, either by selling a property or maybe one of the party takes over the liability and takes over the ownership also. So these are the two ways that we should look at in settling a divorce petition in terms of the home loan settlement. And it will be part of the process itself when the divorce case is filed. It will be part of the reconciliation, the settlement process that both the parties will work on.
Understand, but is that the same strategy that one should apply, that if one of the borrowers is actually no more and end up dying, so what is the strategy there? One person takes the whole of the liability, or in that case also you guys recommend that liquidating the property is the first option that you should be looking at for, or after a point any other co-borrower can be added? Just wanted to understand this process.
Yeah, so what happens, right, is in case now this is like if there is a husband and wife, right, and one of the guy or the wife dies, in that case, the whole ownership of paying and repaying back the debt will be on that other co-applicant. That's a simple thing. Now, so this is simple because normally when your wife and husband, the property is also be owned by the both the parties, and one of the parties dies. So obviously the property becomes to this particular party, and you are in the sole ownership of the property. Now, the problem is that if it's a sibling, in that case, the descendants of the sibling can be entered into a home loan. They can start taking the liability. Otherwise, what will happen that, there has to be a tree structure that operates within that particular thing. So if this sibling, one sibling dies, so the descendants of that sibling or the other family members who are the blood relationship for that sibling can be added as a co-applicant in that particular process, and they can take the liability and start paying the way it has been structured without disturbing. And the same thing can be happening in their overall property documents. So that is one option that we have. Second option is that obviously, once the one party dies, obviously the entire onus of paying back the home loan will come on to the other co-applicant. and there is no other thing that we can look at doing it from that perspective.
Understand. But Pankaj, another question that popped up in my mind is that w- which is actually more common, in a sense that are people going for individual home loans, or is joint home loan that popular? And what do you recommend to your clients?
So normally we say that you should always go for a joint ownership, joint home loans. The reason are multifold. One is obviously you will have a higher eligibility criteria, so you can buy more loan. Basically, whatever loan that you want, your eligibility criteria becomes higher. So obviously your disbursement value will be very high. That's one. Second is that once both the parties are working, right? So somebody, if one guy is not able to pay, when it's a joint, right? It makes a lot of sense, because then if one person is not able to pay for few months, at least that somebody will not get into a default rate. Which if I'm alone paying the entire loan and I'm not able to repay it for next 2-3 months, my name will start reflecting in CIBIL, and there are a lot of issues that will start happening on my credit scores and my credit rating and underwriting a long run. So I think I would always suggest to the viewers that please take a joint loan. That's the second way, because one, you have stability because two people are there, two incomes are clubbed. Third is that, as I told in the earlier section also, when there is a woman around it, you get a 5 to 15 basis points reduction in your interest income also. So these are the three very broad criteria which helps you to make sure that when you have a co-applicant along with you, this makes a lot of sense to do a co-applicant being around with you on the home loan side.
And Pankaj, but just the last couple of questions. Is there any difference between an individual home loan and when we are going for a joint home loan? Do the banks bifurcate that way, or is the same rate of interest that you will be paying?
So broadly, the rate of interest will only differ if there's a woman in the as a co-applicant. So 5 to 15 basis points a bank can give it to you, but there's no, when both are men, for example. So obviously there will not be any change in the interest rates that you get. Second is some of the places where there is a joint home loan that comes in. For example, my credit score is very strong. My other co-applicant's credit score is not that strong. In that case, banks take a overall view on the credit appraisal of that particular profile. So this is where some of the challenges come, that if I'm an individual guy, my credit score is not good, so my interest rates will be higher, my eligibility becomes little weaker, and my repayment capacity will become weaker. But if it's a joint home loan, obviously all these three factors can be taken care of, and I can look at getting a better interest rate. I can look at getting a higher home loan that I want, and obviously there will be a spread and there will be a comfort when I'm paying it back to the bank. So that are the three various factors you can consider.
Understand. But apart from that, is there any other point that you wish to highlight for our viewers, that why one should really go for joint home loan and not an individual home loan?
So I would say, as I just told, I think one, you can even claim tax benefits on both the parties. So that 3.5 lakh can move to 7 lakhs and so on and so forth. That's very important, because the tax rebate is on an individual ITR level. So that is important. Second, if there is a woman, there you can always look at getting a lesser interest rate on your repayment. So that is important. Third is that your eligibility moves up, which is a significant addition to you in terms of whatever loan disbursement they're looking at. And fourth is obviously if the times are tough and one of the person in the co-op is not able to pay, still you will not be in a default. The other guy can pay in that particular amount that you want to pay as an EMI. So these four factors makes us very, very strong. I am a very strong proponent of we should look at doing a joint home loan rather than taking a mutual loan. That really helps in the long run.
Understand. That question was asked just to sum up the whole conversation. And thank you so much, Pankaj, for joining us today on ET Now and helping our viewers understand why should one really look at joint home loan and what are the pros and cons of the same.
Thank you.